Jan, we're going to delve into two economies today. Let's just start off with Botswana. We're looking at fantastic growth for this economy, 5.2% year on year in 2012. We know that the first forecast was sitting at 6.3%, so we're down almost a percentage point, but still looking very strong, a robust number.
Yes, I think the lower expected growth is almost entirely because of the diamond mining expectation that diamond mining would maybe not be as robust as previously expected. And I think that view is mostly predicated on the fact that diamond prices peaked in last year and this year have not really performed extremely well. Having said that, we must keep in mind that it's not just prices, but of course it's volumes that really dictate GDP growth. On the other hand, what is interesting is that non-mining growth is also very important to take into account. If you look at a time series, you would see that diamond mining growth has been extremely volatile and almost flat over the past, say, 5 or 6 years. Whereas if you look at non-mining growth, output has in fact risen quite substantially. Yeah. So, but with diamond mining, the greater share of the economy.
Absolutely.
Or an important share, it's really determined by that sector.
Okay, well, looking at the overall mining number, the sector contracting by 1.3% in 2011. That's a year-on-year number. The non-mining sector, however, grew by 7.8%. So we're starting to see a fair diversification that is coming through within this economy. Are you expecting sort of this rebalancing to occur well into this year and 2013, and of course protect Botswana from having too much exposure to commodities?
The government has implemented a diversification program. One of the key features of that, of course, is the managed peg of the Botswana Pula. However, despite that, some observers have opined that, in fact, diversification has failed. It is extremely difficult to diversify an economy such as Botswana, despite those policy incentives and policy directives. There are, I think, hopeful signs, especially in the financial sector. There's been some growth there. It's, of course, very difficult to expand the agricultural sector, but hopefully, ultimately, there will be growth in the manufacturing sector.
Absolutely.
But given the small population, it will be very difficult, yeah.
Let's touch on what we see on the MPC front. It seems that we're going to see a very flat interest rate sitting at 9.5%. Inflation is expected to ease around 7.5% by the end of this year. This pretty much being a fair number, and of course when you take inflation into consideration relative to the interest rate front, we're seeing a real interest rate coming through. Jan, do you think that there is room for monetary policy easing down the line if we do see inflation weakening further than the 7.5% that is projected?
I don't think, given the sort of the current state of play, that the central bank would lower interest rates. I think the inflation, although it's expected to trend marginally lower, it's only in the event really of a contraction, a severe contraction in the Eurozone and a collapse of diamond prices and exports and so forth, that they would act. Yeah, that's more or less my view.
So while we were expecting Botswana GDP to come down slightly from the initial projection, a very different scenario that is playing out in Namibia, expecting the economy to grow by around 4.1% in 2012. The estimate was sitting at around 3.8%. We started to see a slight uptick there. So Namibian economy looking slightly stronger than initially anticipated.
I think Namibia is a more diversified and a more balanced economy, so it's not as vulnerable like, for example, Botswana to a specific sector. Although diamonds, uranium, zinc, so the mining sector is an important share of Namibia's output. but they also have a fishing sector, the agricultural sector is strong, and of course also a strong tourism sector, just like Botswana. So I think it's that more diversified nature of the economy that has probably played a role in that.
Interesting though, I mean, we're starting to see dwindling diamond deposits as well, and that just might add a little bit of pressure in this regard. But as you've just elaborated on, Jan, it seems that the economy is doing quite well in focusing on other sectors.
Yeah, the view is that in fact the diamond sector would start declining, but that the uranium mining sector will start overtaking it within a few years' time. Of course, the setback there has been the disaster in Japan last year, which in fact set back the entire nuclear power and uranium mining sector. However, in the longer term, it probably will recover, and I think the uranium mining sector will play an increasing role in Namibia's growth. Also, of course, there's the much discussed oil discovery. I think that's still in its early stages, and we don't really know exactly how that will pan out, but I think that still lies 2 or 3 years ahead of us.
Around 65% of all imports into Namibia, of course, come through from South Africa. This could actually have an impact on inflation. We've got Brent crude, which of course now is starting to come down, but still relatively high. And we've got the inflation figure expected to decline to just below 6% from the current 6.9% that we're seeing in March. Jan, is there a move then to see some monetary policy easing if oil behaves itself and even if food inflation remains at these current levels?
I think inflation in Namibia will remain relatively subdued. As you said, something like 65% of Namibia's inflation is accounted for by South Africa's inflation rate, simply because Namibia imports so much of its goods from South Africa. So they're closely aligned. In terms of interest rates, the Common Monetary Area, the CMA, of course, plays an extremely important role in interest rate determination, not only the inflation rate, so that Namibia's interest rate cannot diverge by a large margin from those in South Africa. Otherwise, it will bring distortions into the money and capital markets. So generally, Namibia's interest rates tends to track those in South Africa, although they're not identical, but although from time to time they are very, very close together. So we're expecting that in South Africa interest rates will increase by about 50 basis points in the middle of 2013, excuse me. So my expectation is that Namibia will more or less follow suit there.
So Jan, if I could just point out that we saw quite a big fiscal deficit of 11.2% of GDP in 2011. It is expected to drop to even below that key 5% level. How is that going to change sentiment towards the country?
I think that will be positive sentiment. The reason there is closely linked to SACU receipts. Now, those receipts have been very volatile over time, and we saw just after the financial crisis that they plummeted. The receipts are really based on imports into the SACU area, and the South Africa's Treasury forecasts paint a very, very rosy picture for SACU receipts, which is an important share of government revenue. In fact, I think the latest number showed nearly a doubling. So on the fiscal side, there's the expectation that there will be a large windfall in financial year 2012-2013. But the problem there is it's likely to be a one-off, and the following fiscal year it may drop back again.